Uh, all right. So this is October 24th, Tuesday. This is a market recap. So let's take a look at what went on. You can see this is how the day played out, but let's walk through and how, once again, I want to reiterate how important rules are about, support until proven otherwise or resistance until proven otherwise. Always be looking for potential look below or look above and fails. I mean, these are the things that you have to be careful on because remember, we're looking at a 5-minute candles with a 30-minute overlay candles. So these are 5-minute candles. So you want to see closes. So let's take a look. So right when we opened, we were at or above the bull pivot. So what do? You want to go long. Or you want to let things sort of shake out and see how the day, how much momentum there is. So if you look at the Renko chart, you can see this is where we started. We started right at the open right above. They shot up within about a minute or two, and they shot back down, and then below here. So this could have shook you out, but the fact that it came back up, this is when you want to get in, and then you go long. And because this right here shows me that we're opening above. You can see this is opening above. We're not opening down here and shooting down and coming up. We're opening above. So the momentum in pre-market, you can see, was it shot down, came back up, and it's been consolidating above that bull pivot. So I would start off the day being bullish, and so you got to be really careful, especially if you're looking at pre-market, as in if you're getting in, you want to be making sure you're getting out at key areas and not necessarily holding for the bigger picture yet. It really comes down to that 30-minute candle. First 15 minutes is very volatile. They're shaking out people. They're closing contracts. So there's a lot of up, downs, and indecisions. So really, it's that first half hour that I like to play. So like, if you didn't play any of this, you see how we went up and then went back down, and then went up, then went back down. See right here, this was a failed breakdown reversal. So we broke down. It consolidated under, but instead of having continuation, it then came back above. And then you see that it actually consolidated again, came back down, retested and held, and then shot back up at the end of this 30-minute period. Then the next period, it ended up double topping right here and then coming all the way back down. And so that's why I say in the rules, as in it's support until proven otherwise, because if you would have saw that we were tanking right here, if you didn't visualize that in reality, we're bullish because anytime you're near a pivot on the top, then you need to be bullish. Anytime you're near a pivot at the bottom, then you need to be bearish. So like, if you're up here, you need to be bearish. If you're above it, you need to be bullish. So you need to be playing those lines. And so here, this pullback was just another opportunity to scoop, and then you hold. And as you go up, you move your stop to where you're in the money and at least at break even. And then any big pullback like this, if you see that it comes back and then reverses again and you have blue on these Renko charts, then you just put your stop right here, and then you know that you're at least a little bit more in the profit, but you're holding for the bigger picture. When you see this big push, I would have started selling probably close to this pivot, just to be safe, knowing that we've had a lot of inconsistency in the morning. And when I say that, is you see how you have these red bars going down, green going up, red bars going down, green going up. So by this time, even though we are above, you want to be really cautious on like holding your position. It's when you start getting past that that first 30 minutes, or really that first hour, is when you want to start maybe holding the position for the rest of the morning. Because right here, if you held after the 30 minutes, you got in at that last dip, right here at 9 o'clock Central Time, and just put a stop and walked away, and aim for the full ATR to ATR move, which is 100 points, that would have happened. This was at 9 o'clock. That would have happened at around 9:45, 9:50. So almost an hour, and you see that it came all the way up and then all the way back down. So then even if you didn't sell into this and you were holding for the bigger picture, or if you missed this, you had another opportunity because this was the last 10 minutes of that 30-minute candle. And so it should have done one of two things. It should have either broke down and then held underneath here, and then if that was the case, then the next TPO, the next 30-minute candle, we probably then would have been consolidated and then came all the way back down. But remember, 9 times out of 10, you start consolidating above a bull pivot, it's gonna go to that mid-range ATR. Now, will it go to +1 ATR? Maybe, maybe not. Who knows? But in the morning session, that's what we're doing. We're compartmentalizing. So what do? Once it makes its way up to the mid-level ATR, you flip. You sell into the strength, and then your best risk reward is to this downside, and you get in. I actually got in right here. And just like in the last lesson I taught today, where is it good to average down or average up? Well, I got in here. I promised myself I was going to wait to down here. What happened? So it got all the way down here, and I got excited. And then when it came back up to here, I ended up adding another contract to the position. So what that ended up doing was averaging. So now instead of my entry being here, the entry was like right here for the average for the 2 contracts. Well, I ended up putting my stop not above but below, because I didn't want to lose money, because it was like, in my mind, it was the ego. It's like, I don't want to lose money after already being in the money, by a lot, by 30 or 40 points. And so what ended up happening is I didn't lose money, but it stopped me out, and then it came down. It slowly consolidated. In my mind, I was freaking out, like, oh my gosh, I think I missed that move. And so what ended up happening was I was like, okay, well, I'll just wait until possibly it comes back up here, and then by 10:30, because remember the rule, if it doesn't make new highs above a pivot, then you should be shorting. So in my mind, I was thinking this was going to consolidate, shoot up, and then right at 10:30, then we're going to reverse. Well, it didn't do that. It consolidated, it dropped, and then it just started dropping. And, came back up, then came down here. I think I ended up getting in maybe right here, and then I got this little bit, and I ended up making maybe $200 or $300 instead of making $2,000. So the point of the story is, when you get good entries, unless your plan is to have 2 contracts around here, 2 contracts, 3 contracts, 4, whatever it is, and then you're risking to above here, you have to just let it play out. Because if you don't, you skew your risk reward, and now anything can happen, because you could have averaged in, and this thing could have came all the way back up, and you could have been negative like 20 points with 2 contracts all right in here, and that would have been $400, $500, $600, and you would have been sweating if you had a small account and before the reverse came down. But this right here was a no sweat, and it was a guaranteed $2,000 once it actually started breaking down. So that was the morning session. So you see how well, I say that's not the morning session. It actually then started continuing down and really wanting to fill this gap. So all of a sudden you come down, it hit the pivot, and then it bounced up. So what do you do when you get to a pivot? You go long. I actually went long right here, and I targeted right here. It came up, it squeezed a lot of these shorts, and then immediately reversed and came back down below. That tells you it's super bearish. If something goes up quick and then comes back down, and you can see that was also a new TPO at 11 o'clock Central Time, and it was below VWAP. So this was just a halfback. See how it was just a halfback pullback before the next continuation move. So what did it end up doing? Consolidating and coming all the way back down. We ended up going all the way back down to the previous day's close I was going to show you something, but I think you now know. The previous day's close right before the morning session was up around 12 o'clock Central Time. I mean, so massive move right here. I mean, the mere fact of we top ticked it, and one contract, but ideally what you want to be doing is going from here to here, and then you're either reloading to go short here, or you're waiting to possibly join the trend right here. As in when it broke down, you could have gone short right here, because this is held all morning, that bull pivot. Anytime it holds, I mean, multiple times, 3, 4, 5 times, when it finally breaks, it's probably exhausting, especially if it's later on in the morning, because it didn't have the momentum to get back up. The odds are this wasn't going to go down and then back up. If you see, I mean, actually, it could have. I say the odds, but that's why you wait for this reject candle. So that reject candle right there told you that it was weak, and you see how it just started collapsing on itself. So now the question is, did you understand how all that worked? And look how easy this looks if you play with very few contracts, get in at precise moments, and just sit on your hands. If you got in right at the pivot and just waited, I mean, you might have got in, you might have got out, you might have got in, you might have got out, but that's the thing. I rather get in, get out, break even, and protect my capital, but as long as it's near a level. Then once you're in and it's decided its direction, then just hold for dear life, and it might take a while, might take an hour. Go and do something else. But so you see how it came from here, 100 points up here, then another 100 points from here to here, so that was 200 points. That's if you didn't catch all these 50-point moves right here, but the easy moves right there, and then once it came back down, you could have grabbed another 50, 60 points from right here, targeting down here. Now that the morning session's done, compartmentalize. You got to think, okay, that's done, whether you're traumatized or not, or exhausted. If you decide you play the afternoon session, you need to make a decision. What do you do next? So here is the afternoon session. It's the 12 o'clock. We are now at this pivot right here. We're at yesterday's lows for the afternoon, not for the day, but for the afternoon. If you look to the right, you're basically all the way down here. So you had this basically double top right at the 850 area, but in reality it was moving pretty slow, and that was the morning session, and it has to do one of two things. That's the question you always have to ask yourself. It's either has to break 705 or the 700 area, and if it does, where can it go? Well, maybe 660. So you're saying all afternoon you're thinking that it's only going to move 30, 40 points, right? Because in reality, that was the previous day's, previous week's close. And so you're saying if that breaks, then this thing's going to start collapsing on itself pretty fast, because yesterday it just proved pretty strongly that it wanted to stay above here, and it had a second opportunity in the afternoon. So what would you do? I mean, the best risk reward is to go long here. You go long until proven otherwise. So what ends up happening? We basically retraced the entire morning in the afternoon. So if you would have got down here, this was 5 minutes before the next TPO, and even if you didn't get in and you waited until 12 o'clock to see if we held, you could have got in at these pullbacks, and you could have risked, you could have risked like 10 points. So you see right here, we came here, we crossed over a little bit, but when trading's not about exact. Sometimes we're able to bottom or top ticket, but you gotta give yourself some leeway. But the fact that it came back and then the new TPO it held, you could have got in anywhere right here, and then risk to below here. And your target is gonna be right here. That right there is another 60 points. Now anything could have happened. We could have, in my mind, what I was thinking what was going to happen is the fact that we dropped below the bull pivot. I'm thinking afternoon we're going to start making our way to the bear pivot, and that would be a full ATR. So what that ends up happening, looking like, is that would mean you need to have these halfbacks. So you have a push down, halfback, push down, halfback. So that's why I would have gone long here, and then I would have reshorted right here. So what ended up happening? It blew through, and then it just chopped. So what I did was I actually drew this little line right here, which is 760. The reason why is, if you look right here, what was the low from the morning session? That first hour, 760. See how it came down, came down? It did break, but the moment it actually broke above, that right there is now support. I would look at that as support, and sure enough, that's what it ended up doing. We ended up, we were caught for about an hour in this chop, and it's super exhausting when you have an idea and you think it's going to go down, but it ended up not going down. So anytime that happens, you have to walk away. If you miss the move, you miss the move. I want to be getting into easy moves. I want to be able to get in at a bottom, and I want to be able to see the move happen within 15, 30 minutes. You know, if it's taken an hour, all of this right here is going to really confuse you, because anytime it goes up, you might think it's going to break out, and then what do? They reverse it. And then anytime you think it's going to go down, you get in to go short, and they end up reversing it. And next thing you know, you're just getting chopped a bit, and you see how it's chopping around a pivot. So how do you play this? Well, you have to put your zone. So I actually, right here at this time, you had this pivot. You see right here, the 30 minutes to the left. That is this line right here. That's the 800 area. It also coincides with VWAP, so that means it should be strong. Then you also had that low from the morning, so that's 760. What do? I put two lines right there, and anything in between, you stay away. And then when it's time to let's see, right here, this was the breakout. This was at right here was after the 30 minutes. Remember what I said? Usually the last 5 minutes, they'll usually run it up after some kind of consolidation or move. So they ran it up, and then they held it right at that 30 minutes above VWAP. So really, in this case, if you would have got in, you would have targeted your stops to right here. And then the rest of the afternoon was just basically chop and slow movement. Chop, 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 you know. So the majority of the move was right here. Getting in and getting out, or getting in and then just moving your stop and then playing for the bigger picture, as in now that you see that it actually broke this downtrend, then you could have been like, okay, well, if it ends up getting above here, then where are we gonna go? We're gonna keep squeezing, and next spot is up here. It didn't get there to the very end. You can see there was a bunch of shenanigans right at the end of the market close, so that's why you have to be super careful. Market closed actually right here. It closed right there. So as soon as it closed, it started just going crazy. These candles right here within, you can see down below. This was right here. This was 1 minute. So within 20-30 seconds, it was going 100 points back, forth, back, forth, back, forth. And it looks really easy to trade. You're like, oh yeah, look at this, goes into pivots, goes in here, but this is happening in seconds. You know, your brain it can't even process it. It's like it's going all over the place, and just stay away from it. Stay away from it. I mean, I think I ended up getting in right here or something, or right here going short, and it went against me with one contract, and I ended up blowing an account. So you're better off just waiting for regular market hours. There are opportunities, but I mean, to me, it's just gambling, because you don't know which direction it's going to go. So again, going back, but you could see that we actually, after the 10 minutes, we never closed above that mid ATR. So this was the range. We were mid ATR all the way down to the previous day's close, all the way back down to up to mid ATR. So in reality, I mean, you had 100 points. You had 170 points, then you had 160 points. So, I mean, I don't know. Look at this as 400 points made today. Now, granted, it's all hindsight. You're like, oh, well, you know, I'm just saying what I'm trying to prove is when you get into these key areas, you want to just hold. You already did the work. Like I end up spending half an hour staring at the screen, waiting for this because I actually sold into this push down here to fill the gap, and then I didn't leave a runner, and so I waited half an hour for this just to slowly grind down. And then what ended up happening when it was time for me to actually make the decision, I didn't make the decision. I got in and then I got out maybe 10, 15 points later, and I didn't hold for the bigger picture. So I said, this is what I would have done. That's what I would have done, but emotions got ahead of me. So in reality, you should have got in, put in a order, and then just walk away. It's so easy for us to want to look at what our position's doing, but it's better off if you just stick to the rules. And rules are timing, 12 o'clock, 12:30, 10, 10:30, are we making new highs? And that's how you can get in a good position. So, all right, well, good luck, and we'll see you tomorrow.